Hello viewers, this is MRP, the market technician. As promised, in this short lecture, I would like to introduce the Doji. Doji are important candlesticks and provide information on their own and as components of in a number of important patterns. Doji form when securities open and close are virtually equal. The length of the upper and lower shadows can vary and the resulting candlestick looks like a cross, inverted cross or plus sign. Ideally, but not necessarily, the open and close should be equal. Doji convey a sense of indecision or a tug of war between buyers and sellers. Prices move above and below the opening level during the session, but close at or near the opening level. The result is a standoff. Neither bulls nor bears were able to gain control, and a turning point could be developing. Here we see some variation of Doji. Long-legged doji have long upper and lower shadows that are almost equal in length. This doji reflects a great amount of indecision in the market. Long-legged doji indicate that prices trade well above and below the session's opening level but closed virtually even with the open. After a whole lot of yelling and screaming, the end result showed little change from the initial open. The relevance of a doji depends on the preceding trend or preceding candlesticks. After a decline, a doji signals that selling pressure is starting to diminish and potential up rally may waiting. After an advance, a doji signals that the buying pressure is starting to weaken and a potential downtrend may knocking. Even after the doji forms, further downside or upside is required for confirmation. Doji alone are not enough to mark a reversal and further confirmation may be warranted. Dragonfly doji form when the open, high and close are equal and the low creates a long lower shadow. The resulting candlestick looks like a T with a long lower shadow and no upper shadow. Dragonfly doji indicate that sellers dominated trading and drove prices lower during the session. By the end of the session, buyers resurfaced and pushed prices back to the opening level and the session high. The reversal implications of a dragonfly doji depend on previous price action and further confirmation. The long lower shadow provides evidence of buying pressure, but the low indicates that plenty of sellers still loom. After a long downtrend, long black candlestick or at support, a dragonfly doji could signal a potential bullish reversal or the bottom. After a long uptrend, long white candlestick or at resistance, the long lower shadow could foreshadow a potential bearish reversal or the top. Bearish or bullish confirmation is required for both situations. Gravestone doji form when the open, low and close are equal and the high creates a long upper shadow. The resulting candlestick looks like an upside down T with a long upper shadow and no lower shadow. Gravestone doji indicate that buyers dominated trading and drove prices higher during the session. However, by the end of the session, sellers resurfaced and pushed prices back to the opening level and the session low. As with the dragonfly doji and other candlesticks, the reversal implications of Gravestone doji depend on previous price action and further confirmation. Even though the long upper shadow indicates a failed rally, the intraday high provides evidence of some buying pressure. After a long downtrend, long black candlestick or at support, focus turns to the evidence of buying pressure and a potential bullish reversal. After a long uptrend, long white candlestick or at resistance, focus turns to the failed rally and a potential bearish reversal. Bearish or bullish confirmation is required for both situations. If we summarize, determining the robustness of the doji will depend on the price, recent volatility and previous candlesticks. Steve Nason notes that a doji that forms among other candlesticks with small real bodies would not be considered important. However, a doji that forms among candlesticks with long real bodies would be deemed significant. Hope you enjoy and understand the doji. Thank you.